Today, I am going to show you the exact path to becoming a consistently profitable trader. Someone who knows exactly what they are doing and who sleeps well at night. The framework you are about to see is not something I invented alone. It is built from ideas and principles discussed by some of the most respected voices in trading psychology and professional trading, including Mark Douglas, Brett Steenbarger, and many of the lessons we study here on the channel from traders like David Paul. But here is the interesting part. Most traders are trying to climb a mountain without a map. They do not know where they are on the journey, they do not know what the next stage looks like, and they do not know which trap is waiting for them. The result is simple. They repeat the same mistakes year after year. But if you have a map that clearly shows the 5 stages that every trader must go through, from beginner to professional, then everything becomes clearer. You know where you are, you understand what comes next, and you see the specific step required to move forward. This video is that map. We will go through 5 stages. In each stage, you will see the symptoms, the trap, and one specific action you can take to move forward. If you enjoy this kind of content, make sure to like the video, subscribe, and turn on notifications so you do not miss what comes next. And let us know in the comments what topics you want us to cover next. You will also find links to our trusted partners in the description. When you use those links, you help support the channel and keep this content moving forward. Let us begin with Stage 1. Stage 1 is when you do not know that you do not know. You enter the market with a very attractive belief. If you find the right setup, the right indicator, or the right mentor, you will win. This is what we can call the Holy Grail syndrome, the belief that there is one thing that can eliminate losses. And the most dangerous part of Stage 1 is beginner's luck. One random win can make you believe that you are already skilled. Dopamine kicks in, and your brain learns the wrong lesson. Risk equals correctness. Different markets reinforce this illusion in different ways. Crypto encourages a moonshot mentality. Forex creates a leverage trap. Options tempt you with cheap, out-of-the-money contracts that feel like a great deal. Then the market eventually gives you a gift, a drawdown, painful enough to wake you up. That moment usually marks the end or Stage 1 and the beginning of a reality check. Here is a quick self-assessment. If you believe that one indicator, one mentor, or one perfect entry can remove losing trades, you are most likely still in Stage 1. Your next step is simple. Take 20 trades at micro size with a fixed stop and fixed risk. Your only objective is to answer 2 questions. Did you follow your stop? And did you respect your position size? The goal is not to ask, did I win? Stage 2 begins when you finally admit, okay, I actually do not know what I am doing. But instead of calmly building a solid foundation, most traders fall into a repeating loop called system hopping. You run one method for a few days, you hit a losing streak, and you conclude that the method is bad. Then you buy a new course, add a new indicator, or start following a new mentor. The more you learn, the more confused you become. This is analysis paralysis, too much knowledge and no execution. Another common trap at this stage is guru or signal dependency. When you trade someone else's call, a loss feels less personal. Stage 2 is also where traders begin learning about risk, but often apply it incorrectly. You move your stop to break even too early because of fear, or you take one loss and immediately revenge trade to get it back. If you are in Stage 2, the real problem is not a lack of knowledge. The real problem is a lack of structure. Your next step for the next 30 days is very clear. Freeze new inputs. Use one setup, one time frame, and one trading window. Keep a journal focused on execution mistakes, not on profit and loss. That structure is exactly what begins to appear in Stage 3. Stage 3 is the moment when a major realization happens. Trading is not a prediction game. It is a business of probability management. Instead of asking, will this trade win? You begin asking a different question. Does this setup have positive expectancy if I repeat it 100 times? At this point, you start detaching your identity from individual outcomes. One winning trade does not prove you are a genius, and one losing trade does not prove you are useless. It is simply one data point in a much larger sample. Stage 3 is also where you define your edge clearly, not a vague good feeling, but specific conditions. A solid trading plan is written using an if-then structure. If conditions A, B, and C occur, then you enter with risk X, place your stop at a defined level, and aim for a defined target. The clearer the structure, the less room emotions have to interfere. If there is one factor that truly separates professionals from amateurs, it is not entries, it is risk management. In trading, you rarely fail because of a single trade. You fail because of a sequence of trades. If you lose 50% of your capital, you need a 100% return just to recover. Professionals understand this and avoid falling into that hole. A simple standard is to risk a fixed percentage of your equity on each trade, typically between 0.5% and 2%, depending on your style. The key is consistency in risk. At this stage, you also begin to see the stop loss differently. It is not a punishment. It is insurance. You are paying a small cost to remain in the game. Stage 4 begins when your results start to become more consistent. However, correct execution still requires conscious effort, because emotional impulses are still present. There is also a strange but very real sign at this stage. Trading begins to feel boring. Professional traders live by routine. Before the market opens, they check the news calendar and mark key levels on the chart. During the session, they only take trades when their checklist conditions are satisfied. After the session ends, they complete their journal. And they do not simply record profit and loss. They track metrics such as MAE and MFE, and they tag the emotional state of each trade with notes like fear, greed, revenge, or confidence. In stage 4, consistency matters more than intensity. You start doing fewer things, but you execute them correctly and repeat them with discipline. However, stage 4 still contains what we could call boss fights. The most dangerous one is what many traders call God mode. After a few winning trades, you increase your position size just a little. You relax your rules just a little. Then a completely normal market reversal occurs. Professional traders rarely fail because they lack knowledge. They fail when they become lazy or overconfident. Another common trap is performance anxiety. As the account grows, the larger numbers begin to create psychological pressure. The solution remains the same. Risk defined as a percentage of equity, a strict checklist, and a consistent routine. Stage 5 begins when trading becomes almost reflexive. Not reckless, but refined. At this stage, you begin to recognize context very quickly. Price rhythm, candle speed, and liquidity locations become easier to read because you have seen similar patterns thousands of times. Flow is not a magical or mystical feeling. It is simply a state where you consistently do the right thing at the right time without forcing decisions. Mastery also teaches an important lesson. Trading is an energy management game. If you did not sleep well, or your mind is tired, you do not trade. One of the highest levels of stage 5 is knowing when to step aside, because not trading is also a professional decision. It is also important to understand that learning speed can change depending on the market you choose. Crypto trades 24 hours a day and often creates a kind of time compression. You experience volatility more frequently, which can accelerate learning, but it also increases the risk of burnout. Forex is extremely liquid and often noisy. If you scalp in this market, you must learn to tolerate constant noise in price movement. Stocks operate within clear market hours, which creates a natural mental reset each day. However, traders can easily overload themselves with company-specific news and macroeconomic analysis. A practical approach is simple. Choose one market, one time frame, and one trading window. Do not try to learn everything at once. Let us quickly recap the journey. Stage 1 is illusion. Stage 2 is frustration and confusion. Stage 3 is probability and risk management. Stage 4 is routine and discipline. Stage 5 is flow and the wisdom to step aside when needed. The journey to becoming a consistently profitable trader is not about finding a perfect strategy, but about progressing through these stages with discipline and awareness. When you understand where you are in this process, you stop chasing shortcuts and start focusing on the skill you actually need to develop next. So take a moment to ask yourself honestly, which stage are you in right now? Because once you identify your stage, you also identify the next step that will move you forward as a trader. Please also remember that the mission of the ComLucro channel is simple. We focus on giving traders clarity, confidence, and structure, so market decisions are made with discipline and intention. On this channel, you will find complete courses built as a true trading masterclass. We teach market structure, higher time frame trading, and supply and demand, always focused on understanding price behavior and executing with a professional mindset. We also go deep into trading psychology, risk management, and consistency, because trading is not just about charts. It is about mindset, discipline, and structured execution over time. There are no shortcuts. Real progress comes from continuous learning and practice. Our main courses include Smart Money Concepts, Technical Analysis for Day Traders, Trading Psychology, and the Wyckoff Method course. Alongside our courses, we share lessons and insights from some of the most respected names in trading, including professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, and Larry Williams, whose experience has shaped how traders understand markets today. So, if this video helped you gain more clarity, leave a like. It helps this content reach other traders who are on the same journey. Make sure to subscribe and turn on notifications so you don't miss our latest lessons and insights. Now, I would really like to hear from you. Which concept in this video made the biggest difference for you? What topic would you like us to cover next? Leave a comment below and let us know. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro Trader community right here on YouTube. It is a simple way to support the channel and a smart investment in your own growth as a trader. Thanks for watching, and I will see you in the next video.